In this video, we will take a look at Ray Dalio's recent interviews where he continues to predict the down cycle. According to Ray Dalio, we are in the last stages of this market expansion. Dalio forecasts that the 2020 crisis will be bigger than the one that we had in 2008, and it will be similar to the Great Depression in 1931. As we already know, the economy isn't doing so well. Gross domestic product is down significantly. Dalio expects a massive drop in GDP in the second quarter of 2020. Thus, he thinks that the stock market will react negatively to that, and we might see further decline just based on the second quarter results. Dalio believes that the very strong bull market and economic expansion that lasted for the past decade was mainly because the Fed printed large quantities of money and kept interest rates at zero for the entire time of this expansion. History is important to study and learn from, because those of us who do not learn from history are doomed to repeat it. If we look at this chart that goes all the way back to late 1950s, we will notice that for the past 60 years, an average bull market lasted for about 5 to 6 years, and the average bear market lasted for about 1 to 1.5 years. However, this current bull market definitely lasted well over the average duration, and the expansion is likely coming to the end. This is what Ray Dalio calls the end of the short-term debt cycle. So far, we have seen the market drops for only 4 weeks, while the economy is down for 2 consecutive quarters. Ray Dalio said recently that the stock market could be on the verge of a lost decade for investors. Dalio predicts that we could see a reversal cycle with multi-year decline in corporate earnings, and the pain that started this reversal cycle is this illness. It's very important to learn from past mistakes. Unfortunately, humans are created in such a way that we do not learn from history unless we repeat the same mistakes multiple times. That's why we see all these cycles repeat constantly from generation to generation. According to Ray Dalio, in addition to being at the end of the short-term debt cycle at the moment, like if that was not bad enough, we have reached the ceiling of the long-term debt cycle as well. The last time this happened was in 1946. Back then, debt to GDP was the highest in history, and it peaked at 121%. At the end of 2019, the US debt to GDP ratio was at 107%. However, a lot has happened since then. The Fed has almost doubled its balance sheets, and the US federal debt has increased massively, while GDP has dropped. So Dalio expects that the debt to GDP ratio will skyrocket, and we will see similar numbers to 1946 very soon. Besides being at the end of the long-term debt cycle, we are already at 0% interest rates, and the Fed is currently not only just buying treasuries, but also corporate bonds as well. Since Ray Dalio knows how the economy works and the key patterns that repeat throughout history, he concludes that we are in a similar situation to that of 1930 to 1945, because the ingredients are exactly the same, with debt on our hands, low interest rates, and the vast printing of money. And the bad news is that this period was not exactly the most fun or profitable period to be in for investors. So the question becomes, what can we do? How can individual investors protect themselves from the reverse down cycle? Ray Dalio said that the investment environment going forward will be much different than the past. It's true that when earnings are down and the prices of stocks are pumped up by the Fed, the yield or the rate of return is highly diminished. Furthermore, the worst thing that one can do is think that they can time markets. According to Ray Dalio, the key to protect ourselves in such an environment is to know how to diversify well and in a balanced way. More specifically, is to have some unusual assets on our portfolio that investors would usually shy away from, such as gold and inflation-indexed bonds. Dalio has created something which he calls an all-weather portfolio. This portfolio is supposed to be able to weather any economic season and still do well. It has 30% exposure to stocks through US and global ETFs. Then it has 55% in different types of bonds. Also, it has got 7.5% in gold, and lastly 7.5% in commodities. According to Ray Dalio, cash is trash. We already know that cash loses value over a long period of time. However, in a deflationary environment, he who has cash is king, such as Warren Buffett. Warren Buffett holds like 30% of cash on his balance sheet. Cash would further allow you to capitalize on opportunities once they come by. Thus, I would definitely recommend having some cash in your portfolio as well. Do you guys agree with Ray Dalio and think that there is more downturn in this market? Let me know your thoughts in the comment section below, and hit that like button and subscribe if you haven't.